everybody, Drew Dosek here with Verified Investing. And today we've got the commodity charts that we're going to dive deep into. I know oil is moving today, so it's even more in particular that we study this and figure out where price action is likely to go. Today we had the UAE declare they are leaving OPEC, and US oil started shooting up off of that news as well. And then we'll get into the charts because it was all displayed right in the charts too. People that do understand technical analysis, you can actually see where price is likely to go. Thus, that's how we get our probabilities by determining these patterns. First up, let's look at US oil. So US oil on the daily time frame, you can see in the last 3 trading days, what have we been doing? We've been butting up against this resistance level at $97.32. Today, we've actually pierced and gone through comfortably, getting above $100 on US oil. Right at the high is $101.85. If we get into the 10-minute chart, we actually had a pretty steep sell since then and have since moved sideways. Now, what's happening intraday? We've got all these 10-minute wicks. Mainly this one started here at 8:20 in the morning, displaying that this area is going to be tough for a sell to get through, at least intraday today. All of the wicks following up since then are displaying the exact same thing. Buyers are stepping in basically at this $99 level. Now, eventually, if we keep tagging that like we are, we can break through. The more that you tag a support level, it can break through. But at least right now, this $90 level is holding price. So let's just say, hypothetically, this $90 holds it. Or pardon me, let me get back in. This $99 instead of $99 level holds. Well, then we can see here on the daily chart, if we continue marching up, we're likely going to retest the bottom of this parallel channel. First resistance at $104.34. Second one at $107.48. Notice that $107.48 will likely coincide with this trend line if we do march up over the next 3 trading days. If not, the parallel, as you see here, does extend and get higher in price range. Will continue to be resistance on the way up, but we likely several days later will have a higher level for that bottom of the parallel channel. But oil has been a key driver in pressure in the markets. So it's important to recognize where the resistance levels are, where are we going to be trading throughout the day, and even better, if you can spot some intraday supports, that likely will be a low created for the day, which then actually can push price higher, which then would imply the market should be under pressure. All right. So spotting the highs and lows really can help you, especially if you're day trading with the volatility of oil. Now, we've kind of gone stagnant with that over the last week or two with the ceasefire. But now, as you see, we're bubbling up with new developing headlines causing a spike here in the price of oil. Moving into nat gas. Nat gas has not responded to the upside that U.S. oil has. Matter of fact, we've just been creeping lower on this chart. You can see I've got a couple trend lines drawn. Let me blow this up just a little bit for you. So to the upside, this clearly is the line in the sand to beat for any bulls on nat gas. This pattern, though, is a bearish pattern, catching support at $2.71. In order to get out of this bearish consolidation, you want to see price get above $2.90 and then close above and push higher. That will free up some breathing room for this stock or this commodity, pardon me, and allow the chart price to then push up higher, eventually potentially tagging the bottom of this parallel channel. Until we get above that line, this is bearish, folks. That bearish consolidation implies that we are going to be heading lower. $2.41 will be the next level of support should this level break at $2.71. So we're really booking it in price action right now. And considering the fact that natural gas was under pressure with the conflict in Iran, we have not surged to the upside like oil. Therefore, I don't see a surge occurring any near time possibilities for natural gas. Again, just watching this line very closely, $2.90. That's the price point in which probabilities can then shift and change. But from this pattern, as I've said, I'm angling for more downside to $2.41. And if we zoom back out on this chart of nat gas, put it on the weekly time frame, you can see we could go much lower. Now we're approaching the hotter months in the northern hemisphere. So you can see the next major pivot beyond the 241 that I explained is actually at $2, guys. Top of this consolidation corresponding with these low pivot prices, as well as this low pivot, and then the bounce that occurred since then. So we really do have somewhat of a cliff. If we come down to 241, start consolidating, as $2 will be the next major level of support. Next up into gold, folks. And gold, you can see here with this daily plunge dropping nicely, 2.3% today, getting beneath this minor support. So for today, I'm curious to see if this $4,588 level will be held. If so, any bulls in gold want to see this support level held as long as possible, because if you notice, it's right on top of this consolidation. If we break, close in underneath this level today, that does bring into the possibilities a push for gold down to under $4,200, getting through that consolidation. We likely will take several days to get through this, but this is the break point for that probability increase for a chance to go lower on gold. So be watching the close today at $4,588. See if we can't get price above it, which then could kick the can into tomorrow to see if this level will hold or not. Next up, we've got silver. Silver also pushing down today, but you notice we put in some nice consolidation for the previous 5 trading days, tagging the support level 75.33, got a nice bounce, then proceeded to hit it, pierce it, hit it, pierce it, hit it, pierce it. 3 consecutive trading days. That weakens this level of support, thus giving us the insight that, guys, we're likely going lower here on silver. Now, silver's consolidation, you see, we didn't get in as far as an extension on silver as gold. We're already right here in the top end range. This could be a little bit of a support area. However, the line to beat to then get back into more bullish is $75.33. So as long as we close underneath that, probabilities are dictating we should come lower. Next area of support will be on this inclining trend line, $67.45. Let me show you where that's coming from. And you can see that's from the low pivot in August of 2025, strung over through the next pivot in October of 2025. And you notice how price action pierced this in March of this year. So that will be the next level of contention. And if that trend line breaks, considering that we've hit it now once, twice, 3 times, the 4th hit will be a 50-50 chance on if it breaks. That if this does break, we're then going to be retesting the lows here on March 23rd, as well as the 50% area of the parallel channel at $58.56. Lastly, guys, let's move into copper. All right. So we haven't checked out copper in a while, or at least I haven't on this Commodities Pro Chart videos. But I wanted to bring this to your attention for a couple reasons. Copper's done a fantastic job making a beautiful V-shaped recovery on top of this parallel. To show you where this parallel comes from, this is back from May of 2021. And you can see price really did a great job being contained within it all up until we broke here in December of this last year. Now we pierced it, we just never maintained above it before then, but we came back down. Beautiful recovery in this inside bar weekly candle to get back on top. Notice too, it put in an amazing consolidation here, but then also this is very, very close and is a weekly topping tail buried amongst all of that consolidation. So that was the signal that price on copper was about to plunge back down into the parallel, but it's fought its way back up. So this is an amazing recovery. And I've gone through this several steps to kind of show you the process of the battles that have taken place on this chart. That's kind of the way I like to view it too, because each one of these candles, there's battles between bulls and bears taking place every single day on the chart. Near term, the bulls have won, pushing price back above this inclining parallel channel. That then leaves this inclining parallel top portion as support at $5.76. To the upside, we've got this inclining trend line that copper needs to beat. As you've seen, that's been on this chart for a while, for several years. That level is $6.37. Beyond that, then we've got this weekly topping tail to battle at $6.62. So you've got the roadmap planned out for you there with the support on top of the parallel, next resistance on the trend line, and then a significant level of resistance to beat with the weekly topping tail at $6.62. All right, guys, that wraps up today's videos on commodities, throwing in copper in there as well, because a lot of people are interested in copper specifically for potential build outs with construction and piping. But it's always important to keep that on the radar, because right now it looks like copper is doing pretty well, is maintaining itself above that parallel channel. Also, monitor the oil. Can't stress that enough, guys. When this conflict's going on, if we start rocketing up in oil, you better believe the rest of the markets are going to be under pressure. And simply being, that's going to squeeze margins. We saw today Spotify got slammed down, not because of bad earnings or because of bad revenue, but it was because of guidance. And so the guidance coming out for future quarters and yearly revenue is extremely important. And if those margins are going to get squeezed with higher gas prices on a lot of different stocks, well, then we've got to be mindful of our commodities and the oil levels that I gave you. All right, guys, thanks again for watching. We will have more videos out to you every single day and every week. Can't wait to have more out, but thank you so much for being here to watch them with us. All right, guys, until then, you guys have a fantastic day, and I'll see you guys on the charts. Take care, everybody.